Hey guys, Tex here. Welcome back to the channel. In today's video, I want to share this disaster of a day with you where I lost $2,000. I made plenty of mistakes today. I think there's some good lessons to be learned. So let's go ahead and roll the intro and jump into the video. All right, guys, so welcome back. Yeah, it definitely sucks to be finishing down $2,000. Like I said, off the top of my head, I'm trying to remember the last time I had a loss even close to being this big, and it's been well over a year and a half ago. I'm trying to think, it might have been that loss I had on Amazon where I lost a little over $3,000. So at the end of the day, it sucks losing $2,000. It's not the end of the world. It's totally recoverable. But like I said, I think there's some good lessons to be learned. So let's just run through what happened today and really kind of all started out with Apple. So at the end of the day, when you look at Apple here, I was down about $425 or so, a little bit more than that. And that in itself is fine. I mean, I know I can make that back in a day. The problem is that I even posted in the chat room about today being a Fed rate decision. Today was the FOMC day, so we knew that there was going to be a lot of volatility today. Now, these trades were all taken before that decision came out. I knew I wasn't going to be in a position when that news hit. But I did mention that it's probably going to be a good idea to be cautious about taking breakouts because volume might be pretty light today. I just can't imagine there's going to be a lot of traders willing to commit much money to new positions ahead of that FOMC decision. So I didn't follow my own advice, and I tried to take a breakout trade on Apple this morning. You can see on this first opening, we're looking at a 2-minute chart. You can see this first opening 2-minute candle here, price held, and then the next 2-minute candle, we go for the break. And so that's when I take the first trade. I get in some calls here on this break, looking for the move higher. Now, for some technical perspective, let's go to our daily chart here on Apple and just take a look here. I was looking at this downtrend line. I've been talking about this, I think, in the last couple weeks videos, but was looking at this downtrend line. I was thinking if we could get a break over the prior day's high today and make a run to that trend line before the FOMC decision comes out, maybe there's a good trade that could be had here, and that would have been a perfectly solid trade. Great idea, and nothing wrong with the execution of it, other than the fact that I just stayed in the trade too long. Going back over here, when it started to fail and started to roll back over, I held the trade. I just, instead of, I'm usually pretty good about managing risk, especially on these breakout trades and getting out if they just even remotely hint that they're not doing what I expected. Now, typically my hard stop on something like this is low of day, but low of day is a long ways away from where I was actually getting in the trade on the breakout up here, right? So that's a significant ways to hold. And while I would typically, risk off of low a day, I try not to, hold all the way down there if I can prevent it, if the price action is telling me otherwise. And today it was, and I didn't listen to myself, and I held all the way down to low of day, and I even held past that, and I averaged down, just trying to essentially get out of the trade at that point. And I ended up getting out of the trade, but not before realizing, a $325 loss, only to watch Apple rip all the way back up to all-time high. So that right there immediately kind of definitely made me frustrated, right? Because guys, losing money is part of this job. You have to be okay with losing money. And if you lose money from taking a legitimate trade that just didn't work, right? Because not every setup works all the time. If you take a legitimate setup and it's just one of those times that it didn't work and you lose money on it, those are trades that I'm completely okay losing money on, right? Because I did everything correct. It's just one of those times it didn't work. As long as I wasn't over position size, as long as I was just following the trade plan and it didn't work, those are very easy losses to swallow. Those are very easy losses to live with. But when you take a stupid trade or you don't follow your trade plan, and you end up taking a loss on it, those are always a lot harder to stomach. Those are the ones that hurt the most. So, losing $325 in terms of P&L, really not a big deal. That's not really what kind of got me upset this morning. It was more the fact of how I lost it. So starting out the day with that kind of a loss definitely sucked, but I wasn't like over the edge, emotionally compromised. I was just irritated. And then I tried another opening range breakout here, but this time with shares, right? So you can actually see my entries and exits. So I actually bought shares of Apple on this break, and I tried the first one. I bought 500 shares, and then it failed, rolled back down, took it off for a small little paper cut loss. And then it came back up. I got back in, this time with 1,000 shares. And again, started to work. I was up like, I don't know, almost $100 or something, looking good for the break over 131. Nope, didn't get it, rolled back over, and I got out again for a pretty small loss. So I think, in hindsight, looking at this breakout trade, I did a pretty good job of managing risk. Excuse me, I gave it a shot, didn't work, and I only lost $102 on that particular trade. So at the end of the day right there, if I had just stopped there, it would have only been down, a little over $425, $427 before fees and commissions. Not the end of the world, And then comes Facebook, right? So let's take a look at Facebook's chart here. Let's go back over here and let's just pull up Facebook. And I want to go to the 15-minute chart because this is kind of what I was looking at the time. Really big extended sell-off right here, right? So Facebook breaks low of day here and just really just tanks, right? Comes all the way down here into your daily 9 EMA, this fuchsia colored line, and then this green dashed line below right here. This is your second support level from the pivot point study. So as Facebook was literally tanking and coming down like this, I start scaling into some calls for a typical contrarian scalp, right? Very high probability counter trend play. It's usually a very quick in and out scalp trade that I usually do very, very well with. The problem is that first of all, it's an FOMC day, as I said, and I should have known that a trade like this is going to have a lower probability of working because of the fact that there's just going to be less buyers in the market, right? There's just not a lot of people that are really going to want to buy something ahead of the FOMC, even though it's very extended here. So that right there should have been a huge no-go for this particular trade. But otherwise, the setup's solid, right? I mean, big extended move, very high conviction retracement, which we eventually got here, but not before I got out of the trade. So we see on the 15-minute chart here where Facebook actually puts in this really nice hammer candle, very typical type of reversal candle where you would expect price to bounce, at least come back up into the 9 EMA right there. And that's really all I was looking for on the trade. The second problem is that I started in with way too much size. And again, because in my mind, I'm thinking, oh, this is a great, setup here. Usually a high probability setup that I should be able to easily make back those silly losses on Apple plus some and walk away with a decent green day here. And so that mindset right there meant that I was automatically starting in with too much size on this move down here. So by the time Facebook did bottom here, even though it really kind of didn't want to bounce, you can see the next two 15-minute candles here just actually came lower. I was already in with 51 contracts, guys. That for me is massive, massive size. That was probably about $25,000 of capital in that particular trade. So massive, massive size. So that meant that when Facebook, tried to bounce, but then on this next 15-minute candle here, you can see where it came up here and it broke the high of the previous candle and then failed and just came back down. That meant that when this candle here basically looked like it was going to reject and continue to come lower, I just didn't have any more room to keep holding the trade and keep adding into the trade. It's at my risk level, but I added in too much too early. And so at that point, I had to start unwinding the position. And let me tell you, when you have 51 contracts and there's really no one interested in buying calls like there was at that particular moment in time, it is really hard to get out of that position at the price point you want. So I had to unwind about half the position, realizing I guess I realized over $1,600 in losses. And then when Facebook started to look like it was, just doing a little bit of a fake out and then it was finally going to round back up and bounce, I added back in, right? So I took off about half my position, realizing a loss, added back in, and then Facebook started to bounce, but it just did not get the follow through and just rolled right back over. So I just unwound the entire position at that point. And unfortunately, by this point here, I'm out of the trade. And realistically, like technically speaking, I should have risked off of this low right here. If I had risked off of this low here, I never would have been stopped out on the trade. But the problem again is that I got in with too much size. So I just could not risk all the way down to that low with the size that I had. So I really shot myself in my own foot by taking that kind of size, and just was not able to maintain a logical technical stop on the trade. And I missed out on this bounce here where undoubtedly, I don't know what the premiums were at that point. I had left to go grab some lunch. At that point, I was more than done trading on the day. But I'm sure I would have been able to at least get out of the trade break even, if not for a profit. So I missed out on the bounce I was looking for because I got in with too much size and really kind of too early for the move. And again, I think the FOMC played a big part in that. So lesson here really on FOMC day is not only to express caution and probably size down given the risk of volatility on the day, but also probably not a good idea to take these contrarian scalps, because even though it's very extended and the probabilities dictate that it should bounce and you should be able to get some type of a scalp trade out of it, it's, I would say, less likely in terms of the probability because of the fact that there's just not going to be as many buyers there. And that, I think, was the case. So with that said, guys, like I said, so lose $2,000 on the day, it sucks. It's not the end of the world. I know it's completely recoverable. It might take me a few days to make it back, but at the end of the day, we still make mistakes. It's part of being human as traders. As you're going through your learning curve of learning how to trade, you're going to make plenty of mistakes like this. So it's just really important that you really analyze the trade and really understand what you did wrong. Write it down in your journal. That way you can look back, especially on these larger losses, what you did, what was happening on the day. Kind of write a narrative of what was going on in the market, so you remember, like, today was an FOMC day, so you can look back on those trades and you can remember, yeah, I remember. So the next FOMC day, I'm probably not going to be taking any contrarian scalps. There was certainly some good scalps to be had after the announcement came out. Obviously big moves, big volatility, and that would have been really the ideal setup. That would have been, wait for that. But anyways, like I said, guys, hopefully you got something from the video. Hopefully you guys were able to trade safe today and walk away with green in your account. Like I said, at the end of the day, it's just another learning lesson and part of being a trader. So with that said, guys, as always, appreciate you watching the video. Hope you're doing really well. Take care, and we'll see you in the next one.